what's up, good people? It's Elena of Financialdemics, where I give you the tips and tools to manage your money, increase your savings and your income, and decrease your debt. And today we're talking about the difference between a traditional IRA and a Roth IRA. So do you know what an IRA is? Some people tend to get an IRA confused with the retirement plan that is offered at their job, but they are not the same. The retirement plan offered at your job is a 401k or either 403b. Sometimes you have like a 401a or 457, and you can also have a Roth 401k at your job. But an IRA is an individual retirement account. And there are several types of IRAs. There's a traditional, a Roth, a SEP, and a simple IRA. And these are things that you can invest in on your own. SEP and simple IRAs are typically used for business owners, so we're not talking about them today. We're going to talk just about the differences between the traditional and the Roth IRA. So what is a traditional IRA? A traditional IRA is a retirement account that allows you to make contributions pre-tax. So since you have pre-tax contributions, it's possible that you can get a tax write-off for some of those contributions. But also, when you withdraw the money, you will pay taxes on the earnings in that account. And so what is a Roth IRA? A Roth IRA is also a retirement account, but the difference is, since your contributions are after tax, you don't get a tax deduction on your contributions, but the earnings in your account will grow tax-free, and when you withdraw from the account in retirement, you will not have to pay any taxes on your withdrawals. Now, the contribution limit on the traditional IRA and the Roth IRA is $6,000 for 2020, and you actually have until the tax deadline to make your contribution for 2020. So if you don't happen to make it in the actual physical year of 2020, you have until April 15th of 2021 to make your contribution. And just so everyone is clear, you can't just contribute $6,000 to your traditional IRA and $6,000 to your Roth IRA. That contribution limit is combined. So you can contribute maybe $3,000 to one and $3,000 to the other, or some other type of ratio. But total in your IRAs for the year, you can only contribute $6,000. So what are the differences between the two? With a traditional IRA, we already discussed that you're able to get tax deductions for your contributions, and those are just based off of if you're contributing to a retirement plan at your job and your modified adjusted gross income. There are no income limits to contribute to a traditional IRA, so if you make over a certain amount, you're still eligible to contribute. Your withdrawals are taxable, so that's something that you want to keep in mind, especially if you think that you are going to be in a higher tax bracket when you actually retire. Now, with the Roth IRA, of course, you have those tax-free withdrawals as long as you're over 59 and a half and you have had your account for at least 5 years. You don't have to worry about a required minimum distribution, and there is no age limit on the account. But there is an income limit on the account. So if you make over a certain amount, you cannot contribute to a Roth IRA. There is a way, which I'll tell you in a moment. But with the income limit, if you are single, you actually are completely phased out, so you can no longer make contributions to a Roth IRA if you make over $139,000 for the year. And if you file your taxes as married filing jointly, then you cannot make more than $206,000 for the year. Now, if you do hit these income limits, you can do what is called a backdoor Roth IRA contribution. Basically, you contribute to a traditional and then you do a Roth conversion into a Roth IRA. But you definitely want to speak to the experts at the company that you hold your account with to get all the details on that. And another thing you want to keep in mind with that is that there is some tax consequences involved because you're going from a pre-tax account to an after-tax account. So where should you open up your IRA accounts? So there are many companies that offer IRA accounts. I am personally not a fan of your personal bank. I'm sorry. I think you should look into investment companies like Vanguard, Fidelity, TD Ameritrade, or even Schwab to open up your IRA account. And then there are so many other companies also, but the reason why I would prefer for you to look at an investment company is because you will have more investment options, more than you get at your job, because your job picks a few investment options. But when you have an IRA at an investment company, you get so many options in the different types of funds and stocks that you're able to invest in. Which IRA should you open? Look, I can't answer that for you. What I will say is this: you should definitely look into which options you feel more comfortable with, which ones are going to fit your tax situation. Because for me, it really just boils down to taxes and income when it comes to contributing to an IRA. And keep in mind, you can contribute to both. Just make sure you don't go over that $6,000 contribution limit on both of them together for the year. But you can do what best works for you. And remember, you always have that option to convert to a Roth later if you decide to go with a traditional. So if you already have a IRA as a part of your retirement plan, let me know which one you have. If you're not, let me know if you plan on opening one. If this video was helpful for you, please give it a thumbs up so that it gets out to more people. If you're still here and you're not subscribed to my channel, then go ahead and hit that subscribe button below, and I'll see you next time with an all-new video. There are no income limits to contribute to a traditional IRA, so